Good morning, ladies. Today is August 28th. It is 9 o'clock a.m. on Monday morning. Welcome to our MetaTrader class. Up until this point, you guys have learned how to navigate MetaTrader 4, and we want to continue with that. The first week of prep school, we will dive right into MetaTrader 4 and start executing trades, counting pips, and really getting a full understanding of where and how we make our money. So with that being said, you guys definitely need to be practicing in your MetaTrader 4 and getting really adapted to the different things that we will be looking at. So quickly, I will go over the most important parts of MetaTrader 4 that we will definitely look at and use more often than others. Remember, here on your left-hand side, this is your market watch. In your market watch, you have your currency pairs. You guys should only have the 7 major currency pairs in here, which would be Euro USD, British Pound USD, USD Swiss franc, USD Yen, Australian dollar USD, New Zealand dollar USD, and USD Canadian dollar. You'll also find the bid and ask price in your market watch. Remember, the bid and ask price are the current market price depending on whether or not you are buying or selling the currency pair. And we'll pull that up on the big screen here in a second so that we can look at that a little more carefully. But your bid and your ask price is what you will use to determine what the price is when you buy or sell. Once you go down to Navigator, which is the next link below, or the next box below, it looks like some people are having a hard time logging in. So make sure that you guys definitely have the phone number and access code properly. I have not locked out the meeting, so everyone should be able to gain access via the internet or your phone. You have your Navigator next. Here in your Navigator are going to be your Trader's Way demo accounts. When we start prep school, you guys will open up a new account. So you'll have another demo account that you have here. You can go ahead and delete the one that you were using in Forex Essentials. Go ahead and wait to open that up because you guys definitely need to be practicing and in MetaTrader 4 between now and the time prep school starts. So play around in it, do what you need to do, but then let's get a nice clean slate when we're starting prep school. We won't work on indicators or expert advisors at all until we get into more advanced courses. We will be going over support and resistance, and we will also be going over candlesticks. Support and resistance is considered an indicator in the market, but we use it in a different perspective in order to get our tops and bottoms, and we'll go over that a little bit today. Your terminal is very, very important. Your terminal is going to show you what your balance is, your equity is, and then when you execute a trade, this is where your trade is going to show. So always when you're trading, have the trade link clicked so that you know exactly what's going on with your trade. Account history is where you guys will go to look at your trades that have been executed in your account. Those are going to be your most important 2 links that are in terminal that you will use. Your mailbox will come in handy if you are adding your MetaTrader 4 to your phone or to a different computer to monitor. Then you will use your new account registration. That is where your login, your password, and your investor password are. So you'll be able to use that in order to add these to another account if you choose so. Someone is turning on their video. So those are going to be your three most important aspects, with trade being the very most important. Remember down here in the right-hand corner, if ever this is red or if ever this is a very, very low number, it means that your connection status is kind of poor. So you definitely want to either log out, log back in, or you can actually adjust it by clicking on it, and then you'll have other data centers to choose from. Rescan your servers if need be so that you can kind of get a better connection. Once we go up to the top, the most important aspects of your toolbar are going to be your time frames, your 15-minute, your 30-minute, your hour, your 4-hour, and your daily. So definitely become familiar with switching from one time frame to another. Oh, this is from our Wonder Woman Tech Conference. I can delete that. So definitely become familiar with that as far as your time frames go. Minimizing and maximizing your charts. That is your plus sign and your minus sign with your magnifying glasses. That is going to be very important. Your horizontal lines. We used our horizontal lines in our MetaTrader 4. You guys are going to use these quite a bit over the course of the next few weeks. So definitely get used to moving them up and down, placing them in different places. We'll go over that today. And then, of course, the labeling. The T is how you draw your text label. You put it on your chart, and then, of course, you can write whatever you want to write in there. For your labeling. So those are going to be most important. And then, of course, executing our orders. So let's go ahead and open up the one-click trading. When you right-click in your chart, you will get quite a few different things that you will use. Here you have your one-click trading. You also have your zoom in and your zoom out, and you have your save as picture. We talked about only submitting screenshots as your assignments. Once you get into prep school, we will be using Discus for all of our homework and all of our submissions. So in order to submit things in Discus, you either have the option of writing or you have the option of inputting pictures. So when you go and you save as picture, make sure that you are saving your active workspace. Take the check mark out of your post image online. This is so that you get an actual photo versus the link that some of you guys were getting. Active workspace will also allow you to see where your trade is, the opening, the closing, all of the information that we need as it relates to your trades. Click OK, and of course you'll get a pop-up box that will allow you to save your picture into your GGFX folder on your desktop, and then of course you'll be able to upload it to Discus when necessary. So make sure that you definitely use that as it relates to taking your screenshot. My understanding is also that Mac does not allow you to do the screenshot in that way. So if you are using a Mac, make sure that you are using your snippet tool in order to do a screenshot. And when you do your snippet, make sure that you are doing from the upper left-hand corner all the way down to the bottom right-hand corner so that I can see your entirety of your desktop and screenshot. If you guys have any questions about the setup of your charts, your market watch, your navigator, your green and red candlesticks, since that is the GGFX template, go ahead and go through the PDF file and make sure that that is correct. So let me delete Welcome to MT4, and let's talk about some of the candlesticks as it relates to some of the questions that you guys had when you were working on your MetaTrader 4 assignment. Let me move this down to the bottom. So as you guys know, these are all candlesticks. The green candlestick represents bullish sentiment. The red candlestick represents bearish sentiment. When you are looking at a candlestick, every single candlestick is going to have a body, depending on the kind of candlestick that it is. It's going to have an open price. It's going to have a closed price. It is going to have a high price, and it is going to have a low price. So when you see a candlestick being developed, that is why it looks the way that it does. If it has a wick or a shadow on top, it's because the high price is different from the open and the close. If it has a wick or a shadow that's on the bottom, the same thing applies. So when you're talking about a bullish candlestick, what that means is that the candle opened up lower, closed higher, and that is what creates the bullish sentiment. If we're talking about a bearish candlestick, the bear candle opened up high and closed lower. So since it has gone down, that is where the bearish sentiment comes in. So when you're looking at these candlesticks and we are looking for a high point or a low point, you always have to include the wicks that are part of that candlestick, because the wick is part of the price of this particular time frame. Remember that whatever time frame that you are on, each of these candlesticks represents that period of time. So in this case, we are on Euro USD 15-minute candlestick time frame. So each of these candlesticks represent 15 minutes of time. You can see where this candlestick just started because right now it is 9:15 Central Standard Time. So this candlestick just started a new one since we just moved over to another period of time. However, if I was on a 30-minute chart, each of these candlesticks represents 30 minutes of time. So I'm still within the same candlestick from 9 o'clock, because we'll be in this candlestick from 9 o'clock until 9:30, and at 9:29. And at 9:30, a new candlestick will start. Same applies to your 1-hour charts. Each of these candlesticks is worth an hour period of time. So we're going to sit in this candlestick right here from 9 o'clock until 9:59, and then it will switch over to a new candlestick. So when you're talking about your trading personality and when you're talking about developing your trading style, keep that in mind. When you're making trading decisions based on what the market is doing, your trading decisions on a 1-hour chart are going to be very different than your trading decisions on a 15-minute chart, because a 15-minute chart, of course, is going to move faster than a 1-hour or a 4-hour or a daily chart. So let's talk about these horizontal lines that you guys also placed on your chart. I believe we worked with an hour chart or a 4-hour chart. So I'll go ahead and go to one of those. If the question said, and I believe this is correct, put a line at the highest point of your candlestick chart, then of course we would look for the highest point. Let me remove this just to make sure. So on this candlestick chart, you can see that the highest point is going to be at the very top of this wick here. So if I posed a question to you that said, what is the highest point on the Euro USD 4-hour chart, you could easily plot that with a horizontal line, and if you follow that line over to the right-hand side, you can see that that price is at 1.19602. So on this particular 4-hour chart, the highest point is 1.19602. If we were to do the same thing for the lowest point on the chart, we would take our horizontal line, place it on our chart, scroll it down all the way to the bottom wick, put it below there, and now we have the lowest point of our chart which would be at 1.16603. Do we have any questions about the wicks and the bodies as it relates to the price and the candlestick? Is someone asking a question, or was that just feedback? In order to scroll, make sure if I double click on the line, you will see these little open squares on each side of it. When the square is open like that, that is where you're able to edit it. So if you were to press delete, it would actually delete it as well. And then you would just click on it and move it up and down as you need to. So if I wanted to put it at the bottom of the longest bullish candlestick, then I would just move it, and my longest bullish candlestick appears to be right there. And then I will double click on it again so that, let me mute. I would double click on it again so that it's locked. Now if it's locked, there's no way that I can move it and it can't be deleted. So that's what you need to do in order to make sure that your horizontal lines stay. I saw another question. How do I replace the line? I'm not sure what you mean by replace the line. If you double click on it, you can delete it. If you want to add an additional line, you would just go back to your draw horizontal line and then add another line to your chart, double click on it, and you can move it where you need to. If you don't want that line there, then make sure that the squares are open on the other side, and you can simply click delete and it will disappear. So let's go ahead and add that line back. I double clicked on it, and then I'm able to scroll it down to the bottom. I saw a question about not being able to put it at the bottom or put it exactly where it needs to go. Seshmi, do you have a Windows computer that you are using, or are you using a Mac? You said you could never get it to scroll, just click. Make sure that it is in the editable status, which you have to have those two open squares on each side in order for it to be that way. Another thing that you can do is right-click on it. It too needs to be in the editable status. Oh, okay, great. Great. Another thing that you guys can do, though, you can pull up the horizontal line properties. Make sure that it is in the editable status. Pull up the horizontal line properties, and if you click on horizontal line properties, so for instance, if I told you specifically I want a horizontal line at 1.17255, then what you could do is open up the horizontal line properties, go to parameters, and here in parameters you can put the specific number that I am speaking of. So if I want it at 1.17255, you would put that there, and then it would automatically place it for you. So that's another way that you can use it. And I believe in MetaTrader 4, one of the assignments that you guys in prep school, MetaTrader 4 assignment, you will have an assignment where you are specifically putting horizontal lines. So remember that. Go into your horizontal line properties and put in the specific number that I am requesting for that assignment. look at a 4-hour chart, put a line on the longest bullish candlestick, we only look at 4 hours from where we are, or do we pick the longest one showing on the screen? So, and then Karen is asking, how is the shadow wick part of the candlestick evaluated into the trade? What if my highest bullish and lowest bearish lines were slightly different than yours? So let's start with the first question with the highest bullish and lowest bearish lines. Depending on when you actually pulled up your chart is going to make a difference on where those lines were. So for instance, if I pulled up my chart on Tuesday and you didn't pull up your chart to do your homework until Sunday, then my chart would have looked like this. My chart would have looked like this, whereas your chart would have looked like this. Because remember, as each candlestick goes to pass, we lose one on our left-hand side in order to make room for the new candlestick. So if our charts are different, then of course your lines would be a little bit different. Now, if our charts are the exact same, then our lines within a pip or two should be the exact same. So if my line is at 1.17845 and your line happens to be at 1.17852, then we're still talking about the same bottom of that candlestick. If your line is up here, then we're obviously not talking about the same candlestick. So it really depends on whether we're looking at the same chart, and if it's within a pip, you're good to go. If you are 2, 3, 4 pips away from my bottom or my top, then we're definitely looking at something different. So keep that in mind. Now, sometimes you'll see a difference depending on, and typically in class I'll use a demo account instead of a live account, because you will see differences between a live account and a demo account. So I typically stay within the demo account so that we are looking at the same thing. Karen, as it relates to how the wick plays into a trade, your wick is still part of price action. So when you are making a decision to get into a trade, you absolutely need to consider the wick, because the market did go to that particular price. Whether it was actually able to create a solid line or a solid space within the candlestick doesn't matter. What matters is that, for instance, in this candlestick here, the top of it was at, let's get a line so I can give you an exact number. The top of it was at 1.1948, whereas the bottom was at 1.8, let me go down a little bit, 1.18642. So if I'm considering making a trading decision off this particular candlestick, I have to consider the very, very top, and I have to consider the very, very bottom. If I only consider the body of the candlestick, then the chances of me making a bad trading decision are much greater, because the price did go as high as the 941 and as low as the 864. For our Alima, this is your question as it relates to putting the longest bullish candlestick. What you are looking at is a 4-hour time frame chart, and that is the kind of chart that we're on right now. So whenever I designate go to look at a 4-hour chart, a 1-hour chart, a daily chart, it's going to be based on your time frames here. And then based on whatever time frame has been designated, you are going to look at the current chart and make your decision accordingly. So if we're looking at this chart for the first time and we hadn't put any lines here, and I'm looking for the longest bullish candle on this 4-hour chart, then it would be this candlestick here. And I almost forgot, arrows are going to be very important to you as well. So definitely get into the habit of going to insert and pulling up your arrow, because your arrow is where you're going to designate any entries in your chart. So this is going to be my longest bullish candlestick, because I'm just going to look from left to right and find out and estimate which of these candlesticks are the longest. The same thing for your assignment would have applied to your bullish candlestick and with your bearish candlestick or bullish, whichever the assignment was. So if I'm looking for my longest bearish candlestick on this chart, I'm going to go from left to right, and it looks like it's a toss-up between this one and this one, because of course I do have to consider my wicks in both of these. So if I look at this one with the wicks, I have a low of 1661, and I have a high of 1738. This is where your Pip calculations come into play, because when you're doing Pip calculations and you're looking at the high of a candle to a low of the candle, what you are determining is how many pips were actually covered within that particular candlestick. So from 661 to 738, if I subtract those numbers, I'm going to get about 40, 30, 70, about 77 pips. So this particular candlestick here is 77 pips from top to bottom. Now if I go over here to the other candlestick that looks like it is comparable and do the exact same thing, this is how I can determine whether one is bigger than the other. So this is 764 and 685. So they're actually pretty darn close. So we have 60 and we have 20. This one is actually a little bigger by about 5 or 6 candlesticks. So this one here would be my longest bearish candlestick. Let me get an arrow out. And there you go. So during week 1 of prep school, we will focus on those Pip calculations and how you guys can actually calculate them from top to bottom, and not only be able to figure out which candlesticks are longest and shortest, but actually how many pips are in between each candlestick. If I had bought on this particular candlestick, how many pips would I have gained? If I had sold on this candlestick, how many pips would I have gained? If I had bought on this candlestick, how many pips would I have lost? To do the arrows, you're simply going to go to Insert, then go to Arrow. Under the arrow column, you have thumbs up, thumbs down, arrow up, arrow down. You would just choose arrow up for your buy positions. You'll choose arrow down for your sell positions. Click on it. It'll come to your chart, and then double click on it to make it editable. And then, of course, you can move it wherever you want to move it. So in order to move things around on your chart, always make sure that they have the edit button. Let me see if there are any other questions that I may have missed. No, ma'am, Shamika. You do not have to buy before you sell. You do not have to sell before you buy. You make whatever decision that you want as it relates to getting into the market based on your technical analysis. And you would buy if your technical analysis says buy, and you would sell if it says sell. Khadijah, can we also use the black printed numbers of open, close, high, low that come up on the very bottom of the screen? Yes, you absolutely can, in order to calculate that. And then, of course, you would do the same thing. You would take the high, you would take the low, and you would subtract. Sasha, does the demo account reflect the market in its current status? Absolutely. These are live fed prices. However, because the brokers are more concerned with the live Fed prices on a live account, you will typically notice a little bit more freezing in your demo account, but ultimately it'll catch up. So sometimes you might have some freezing of 10 seconds, 15 seconds, and you guys might have noticed that as well. But because of that freezing and because of little fluctuations like that, sometimes if I do a screenshot of my live account and I send it to the ladies and say, oh my goodness, is this what you guys just saw? Theirs is a little bit different because it is in a demo account. Did I miss anyone's question? How to get red and green highlights on take profit and stop loss. Lynn, those are automatic if you are putting in a take profit and a stop loss. When you enter a trade, originally you have one line of the trade entry. In order to get the take profit and stop loss lines on there as well, you would actually have to set them. And that is what we will go over in week 1 of MetaTrader 4. Every trade that you get into should always have 3 orders: your entry, your take profit, and your stop loss. Andrea, let me find your question. Are the pip values the determining factor in whether to buy or sell, or are we supposed to look at the full length of the candlesticks? When you are determining whether to buy or sell, you're looking at the entire market landscape. You're looking at the current candlesticks, you're looking at the candlestick right before, you're looking at whether or not the market is in consolidation, whether the market is in an uptrend or a downtrend. So it definitely is not as simple as just, okay, the price is at 946, let me hop in a sell. So you definitely have to look at everything that's going on in the chart in order to execute a trade. So I will show you what that looks about just a little bit. Okay, so here we are on a, let me delete all of these things real quick. So this is a Euro-USD chart. Euro has been in consolidation, so this probably is not a good chart to make a decision on. Let me see another chart, how it is looking. Yep, this one looks okay. That one looks okay. It's actually quite interesting. USD CAD has had some movement this morning. Okay. I like British pound a little better than I like USD Swiss franc, so I will go ahead and look at this chart. So what we are going to do is, and you guys will learn this in detail in a couple of weeks, whenever you are first entering a trade, you are going to check and see whether or not there are any economic reports that are coming out in order to know whether it is going to affect your trading period, because you guys will ultimately decide when you are going to trade. For me, I trade in the mornings. This is known as the London-New York crossover. I find that there is a lot of volume during the London-New York crossover, so it allows me to get in and out of my trades fairly quickly, and my trading day is done typically anywhere from 15 minutes to an hour, depending on what trading pairs that I am trading. If reports are coming out, sometimes my trading day is done in about 2 minutes flat, and I love those days. But it's a little bit more risky, but those are really, really good days, and you guys will definitely learn how to approach the markets that way, because just like they are good days, it could be days where you are losing a lot as well. So risk management and money management will really come in place, especially during those types of fundamental days. So I'd check my reports to see if there's any fundamental announcements coming out, and then I would come to the charts to get a full idea of what the market is doing. So in this particular case, I'm trading the British pound versus the USD. I'm going to look at a longer term chart first so that I can actually see what the market looks like on a longer time frame, and then go back to the chart that I'm actually going to execute off of. So this is what's called multi-time frame analysis. So with multi-time frame analysis, I'm going to start on my 4-hour chart. I see that the past 4 hours, or the past 12 hours, because remember, each on a 4-hour chart, each of these candlesticks is worth 4 hours of time. So for the past 12 hours, if I take 4 and multiply it by 3, the past 12 hours, the market has been in an uptrend sentiment as well. 2 periods before that, which would have been the 8 hours previous, the market was coming off a high and in a downward movement. So these are the first things I'm going to notice on my 4-hour chart. So I'm going to place horizontal lines. These horizontal lines are called support and resistance. What these lines are going to do is give me an idea of where the market was and where the market can go back to. Because the biggest part of technical analysis is that the market repeats itself. So you have probably seen in some of the screenshots that we've posted where we say what comes up must come down, what goes down must come up. And that is because technical analysis and price action will repeat itself. Now, when it repeats itself is always the question that we never know an answer to. But what I'm going to do is make sure that I am prepared and that I know where the market has been. So I go from my 4-hour chart. I'm going to go ahead and go to an hour chart next. And on this hour chart, I'm looking for the same thing. What has the market been doing over the past few hours? So it looks like for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours, the market has been going up. So this would be an uptrend. The hours before that, like we had talked about on the other chart, the market was coming down. So 1, 2, 3, 4, 5, 6, 7, 8 candlesticks, the market was in a downtrend. I'm going to take my horizontal lines and I'm going to do the same thing. And the way that I'm placing these horizontal lines is I'm looking for tops and bottoms where the market paused. And these market pauses are known as support and resistance levels. And you guys will learn these in detail. Then I will go over to my 15-minute chart, and I'm going to do the same thing. Is the market going up? Is the market going down? Is the market just pretty much staying the same? That is how you determine whether the market is in an uptrend, whether the market is in a downtrend, or whether the market is in consolidation. An uptrend is where the market is making higher highs. A downtrend is where the market is making lower lows, and consolidation is where the market is just stuck in the middle and it's not making higher highs and it's not making lower lows. And you guys will learn how to determine that, because that is very, very important as it relates to your trading decisions. So I'm going to go back to that horizontal line and I'm going to place it on my chart again to try and get an idea of where the market is pausing, where the market is coming from, and where the market may go back to. And I'm going to use these lines to help me make my trading decisions. I'll just put a couple in here. And because of this, the market, British pound, probably isn't the best currency pair to try and make a trade right now, because we are, well, that would work. Okay, so I see that the British pound has definitely been in an uptrend. It reached a high level. So now what I need to determine is whether or not this particular candlestick is telling me that the market is headed back towards this high level, or if the market is heading down. I'm going to use these horizontal lines to make my decision. I see that the market has broken through one of my horizontal lines. In this particular case, this line would be called resistance. So since it has broken above resistance, I would get into a buy. And yes, these two boxes are the same as your bid and ask price. Thank you, Tanika. You and I were thinking the same thing. So your bid and ask price are the same as your buy and sell price. So if I open this up and I look at British Pound USD, we see that the bid price is 1.29206, which is the same as my sell price. We see that the ask price is 1.29212, which is the same as my buy price. So because the market has broken through resistance, I want to get into a buy. Oops, I should have done it quicker. But we'll go ahead and go with where we are. So I got into the trade a little bit late, but I executed a buy. The buy trade is here. So now you can see this dashed line. Let me move the big box out of the way. You see the dashed line across here, which is my buy line. And if I go to the left-hand side, it tells you the same on this side as well. I bought there. And if we go down and look at my trade box, it gives you all of the information as it relates to the trade that I just entered. I have British Pound USD. I have that I bought. This was my buy price, 1.2923. I realistically should have gotten in at about 20, but it's okay. And now you can see that my stop loss and my take profit levels are at 0. That is an absolute no-no. What I need to do is go in and set my take profit. My take profit is going to be set to where I am able to get out of a trade in profit. And we'll just use the lines that I have here. So I will set my take profit above my entry because I bought. Since I bought, I'm anticipating that the market is going to go up. So I will set my take profit above that entry. I'm also going to set my stop loss. In order to set my stop loss, I'm going to place it below my trade because a stop loss is there to protect you from losing your account. So your stop loss levels, let me move it down just a little bit so you can see it. Your stop loss level is for you to minimize your losses. If this trade does not go up and it starts going bearish, turns red and goes down, then that means I'm going to lose this trade. But what I'm going to do is minimize the amount of money that I'm going to lose on this particular trade by setting my stop loss. So now you can see I have a stop loss and a take profit. Every trade that you enter should always have a stop loss and a take profit. The market is going to continue to move, and once it reaches one or the other, then the trade will automatically close. So if this trade reaches my take profit level of 1.2925, then it's automatically going to close in profit for me. I don't have to do anything because I've already set my take profit. If the trade goes against me, then my stop loss is already set. I don't have to do anything at all. It's going to close me out at whatever that loss level would be. In this case, it would be a loss of 5 pips, and I would lose $5.20 because I am trading at $1 a pip. And as it looks right now, the market is going to take me out in profit. Let me go to those questions real quick while we see what the market is going to do. All right. Tanika answered that question for me. Thank you. So, Cleo, you are the one who sets your take profit or stop loss level. When I clicked on my buy line and dragged it up, I chose the particular area that I wanted my take profit to be. When I clicked on my line and dragged it down, I chose the particular area that I wanted my stop loss to be. So you have full control over that aspect of the trading. And then what the MT4 platform is going to do is just execute those trades once it reaches the desired level that you have chosen, either as your take profit or your stop loss level. Lynn, can we get stopped out? Absolutely. That's what a stop loss is. A stop loss is to stop you out of a losing trade so that you don't lose more money than your risk parameters allow. Does it allow you to set your stop loss at the same amount you purchased it, or do you not advise that? So once you get into a trade, when you were originally getting into a trade, no, it does not allow you to do that. What you can do is once the trade has gone into your favor, then you can adjust your stop loss to break you even if you wanted to pull it to your actual entry, which basically would mean the market, if it comes back against you, it would hit your buy price, and then you would ultimately break even, maybe take a little bit of a loss due to the commission that is involved in each of the trades that you enter, but you would have to make that adjustment after the market has begun to move. There is a parameter that's set to where you would not be able to set your stop loss or your take profit right there at the level that you entered into the trade. And you don't want to do that anyway when you first enter the trade. By doing that, your trade has absolutely no room to breathe whatsoever. So you always want to execute your take profit and your stop loss, typically about 5 pips on each side minimum. In this particular case, my take profit is only 2 pips, but that's because I did not have the other horizontal lines, and I wanted to show you guys how I'm using my horizontal lines in order to get in and out of the trades. So if I had fully set up my charts appropriately, then I would have additional horizontal lines that I would use to make my take profit a little wider. Can the market drop below it too fast? Can it drop below your stop loss too fast? Absolutely. And when the market drops below your stop loss too fast, you are going to incur what is called slippage. And that means that instead of a stop loss of 5 pips, you might get a stop loss of 10 pips. If the market jumps over your stop loss, there are these things called gaps that occur in the market. And if the market jumps over your stop loss, then it won't get hit either. Those are part of the risks that are involved with trading Forex, and why it behooves you to be an active trader so that you can help to minimize that kind of risk that does and will occur in the market. Not often. Fundamental reports are typically the kinds of things that cause the market to move too fast, or I can't even say move too fast because we like it when it moves fast, but those are the kinds of things that the market moves fast with. Those are also the kinds of things that cause gaps in the market, as well as just a major change over the weekend in opening and close prices that will have gaps as well. Another thing that can affect your stop loss level is the spread. So if the spread in between your bid and your ask price increases, then that too can stop you out of your trade. So there's a few things that you have to look at when you're looking at how you are setting your take profit and how you are setting your stop loss. At the end of the day, what you need to do is make sure that you have given your trade enough room to breathe so that you aren't minimizing your profit and you aren't and making sure that you allow your trade to breathe on both sides of it. Can you change the stop loss if you see that it is going down? So Solandra, as an active trader, you absolutely can. However, there are very, very specific rules. The market definitively needs to be indicating that the trade that you entered is reversing the other way. Just because you panic and you say, oh my goodness, I'm about to lose, that is not where you change your stop loss levels. You adjust your stop loss levels to protect you, not to go into panic mode and trade with emotions. And that's really where emotions come into play with your trading. When you're setting your stop loss and your take profit from the very beginning, you set it based on the risk parameters that you want to work with, whether it is a 5-pip stop loss, a 10-pip stop loss, a 1% stop loss, a 2% stop loss. So all of your trading is going to occur within those decisions that you've made. You know exactly how much you're going to lose before you ever buy or sell. You know exactly what your risk is before you ever buy or sell. So because you know these things in advance, there are typically, and there shouldn't be, any surprises with your trade. So if the trade does go against you, you have already calculated that in, because every trade can go against you. We don't want it to, but of course, depending on what the market does, every single trade can go against you. And there we go. So that trade just closed out in profit for me. But because every trade can go against you, that is why the stop loss is set based on the risk parameters that you personally are okay with. Absolutely. Once those lines are in place, Cleo, the market is going to close the order. So for instance, it hit my take profit level. I didn't have to do anything, and now you can see there is no trade on my screen because the market software automatically took me out based on the level that I placed for my take profit. Yes, ma'am, Sharon. Forex has trailing stops. I'm not sure, Khadijah, what you were referring to as what is considered trailing stops. I did not describe a trailing stop per se. I did describe a manual, more of a manual trailing stop that you can use in order to break even or to protect your profits. That would be considered more of a manual trailing stop if you are the one that's controlling it. In Forex, you can set a trailing stop, but the trailing stop in the Forex market is only, or even on the MetaTrader 4 platform, is really only beneficial for you if you have a take profit of 20, 30, 40 pips. A trailing stop of 4 pips, 5 pips, that does not work well in the Forex market. Absolutely, Teresa. You definitely need to know how to get around in MetaTrader 4. When we get into prep school, it truly is no holds barred. We are going to hit it, and we are going to jump right in the freezing cold water with both feet. So definitely be familiar with your MetaTrader 4 platform. Christina, you cannot avoid slippage on an entry. It's all about the price action. So if when you click buy, the price has moved 3 or 4 pips in a millisecond, then your entry is going to be higher than when you actually clicked the buy. The market sometimes moves too fast. There's no way you can avoid it. Khadijah. Erica, everything that goes on in our charts is based on price action. So because it's based on price action, if the market itself and the price of that currency pairs jumps from, for instance, it's at 1.2925 right now. If something happened to where the British pound jumped price to 1.2936, then it just gapped. They call those gaps in the market. And if our stop loss, or even our take profit for that matter, if our stop loss or take profit was right here at the 12931, something's happening. Was at the 12931 and the market jumped over that line, then because of that gap, our take profit and our stop loss was not hit because the price never touched that line. So when you're setting your take profits and your stop losses, the only way that MetaTrader 4 can actually execute them for you is if the price hits those numbers. During a gap, it may not. So since it never hit those numbers, there's no way it could take you out. How do we change currency pairs in Market Watch? You will have to go, I don't know which currency pairs you're trying to change. You should have the 7 majors in the PDF. It shows you what those majors are. In order to remove them or delete them, right-click in your Market Watch and delete or show so that you can go through and add or delete whichever ones that you need to. So go back through that first part of your PDF so that you have the details on how you're going to do that. There's nothing, Lynn, to set up as it relates to your time zones. What you see on your chart is what you get. What you need to do is figure out, based on your particular time zone that you are in. For instance, 1715 for me, at the bottom of my chart it shows 1715. So what you need to determine is what that is as it relates to your particular time zone. So it's 10 a.m. Central Standard Time. 1700 is going to be equivalent to 10 a.m. Central Standard Time. This chart is set up on Greenwich Mean Time, I think, +2. So it's just something that you become familiar with based on when you are actually trading. But there's nothing that you need to set up or change. Khadijah, possibly. I would need to, when you're putting in horizontal lines, what you're looking for is repetitive movement. So just because it made a top right there on that bullish candlestick doesn't mean a horizontal line is supposed to be there. I simply put that there to show the gap. Now, as the market moves throughout the day, there may be situations that occur that you're going to add additional horizontal lines, but there's nothing really right now going on in the market that would tell me that I needed to add an additional line there. Please mute your phone. Whoever just dropped something. In Pip Calculations, Rhoda, you always drop the pipette, which is the last digit, and then you calculate from there. And we'll go over that in detail in week 1. In order to get your Market Watch tab, and this is where you guys really learn how to navigate your MetaTrader 4, and these are the kinds of things that you guys need to prepare yourself with and look at over the course of the next couple of weeks. When you go through your file, your view, your insert, all of these tabs are at the top of your MetaTrader 4 platform. It has everything as it relates to your platform. So if you click on View and you scroll down, you see your Market Watch, your data window, your navigator, your terminal. So the ones that are highlighted are the ones that are currently showing. If it's not highlighted and you click on it, then that will make it appear or disappear. So if currently I have my Market Watch there and my navigator, my terminal. So if I didn't want my terminal, I can click on it and it disappears. If I want it back, I click on it and it comes back. Any other questions? All right, I will answer Karen's question, and it is 10 o'clock, so I will download this and place it in your Essentials group for you guys to review it, and I'll also place it in the new group so that you guys can refer back to it once class starts here in the next couple of weeks. Karen, when there is a gap in the market, it is simply because price action skips over certain prices. So for instance, if we were at the number 1 and we jumped to the number 5, then 2, 3, and 4 actually got skipped over. And that's what the market can do. And actually, I'll show you a gap because every weekend there is typically a gap in the market. So let me go. Here is a perfect example. Template. You see this right here? So this is where the market opened yesterday. So Friday it closed on this particular candlestick, and then on Sunday when the market opened, it opened here. All this space right here is your gap. So if you had a take profit or a stop loss anywhere in this area, the market skipped over it. So there's no way that the market was able to hit your take profit or hit your stop loss because that price occurred when the market wasn't open, if it occurred at all. So that here is your gap. That probably makes more sense now that you guys can see it. Yes, Erica, the currency pairs that you trade will absolutely depend on the market that you're trading in. The markets that are open are obviously going to give you more volume with those currency pairs. When a trade is closed, it's because it has reached the price that you have put in, whether it's a take profit level or a stop loss level. You know that you have set it at a particular price. So when the market reaches that price, then the trade is going to close. Your lines that are on there as it relates to your buy order, your take profit order, and your close order will also disappear. So when you notice that all those 3 lines that were there were gone, my trade was closed. When you move your stop loss above the buy to protect your profit, if you are manually doing that, that definitely would be considered more of a manual trailing stop. I like to call that just protecting profit. Making adjustments to your stop loss level in order to protect profit. There's not always a gap, Rakisha, but typically over the weekend there is. But nothing in the Forex market is always. Nothing at all. No, Bernice. When the market closes on Friday, if you have open orders, those will remain open over the weekend, assuming that the stop loss or take profit has not been activated. Once the market opens on Sunday, the same thing will apply. As long as the take profit and stop loss are not hit, then those trades will remain open. Cleo, I don't know what you mean by show a pause again. I don't know what a pause is. Your classes in prep school are on Tuesdays and Thursdays. Tuesday morning, Thursday evening. Okay, then you're referring to the pause as it relates to support and resistance. So that'll probably be easier to explain once we're actually doing support and resistance and you're learning how to look for those pauses. But those pauses in the market is basically where the market has chosen a particular price and it is stopping at that price consistently. And that's where your levels of support and resistance actually occur in the market. So if we look at this chart here again, you notice how the market just is not moving up or down very much. So that would be considered where you see some pauses in the market. So at the top of this, the market is pausing and going back the other way. Down here, the market is pausing and going back the other way. So those are your levels of support and resistance that you guys will learn how to plot on your charts to make decisions to get in and out of the market. Tuesday live trading rooms are at 8:30 a.m. Central Standard Time. Thursday night live trading rooms are at 8 p.m. Central Standard Time on Thursday night. One of those classes is required for you to attend. No, ma'am, Sandra. Horizontal lines are very, very different from stop loss and take profit. When you set your stop loss and take profit, then the market will automatically know that those are take profit and stop loss lines because you have designated them as such. By placing just a simple line on your chart, it doesn't mean anything. So you have to designate it as a take profit or a stop loss. The link for prep school and all of the payment links have already been posted in the group. So you can pay whenever you want. I think about 50 or so ladies have already paid. So that is up to you. The deadline for payment is September 8th. If you are not paid by that date, you will not be enrolled in class. Sandra, when you go to execute your trade, depending on how you're doing it, you have the option of putting in your stop loss and your take profit. If you're using the one-click trading, you can actually drag and drop. If you're using the order box, then you will input your take profit and stop loss in, and we'll go over that in detail the first week of class. Nope, the terminal is always available whether the market is open or not. Can actually use the time that when the market isn't open to review the trades that you've made over the week. And Lynn, the second part of your question, if you need to make a payment over the phone, that is possible. You would need to message me, and we can do that payment over the phone. What you need to practice between now and then is simply navigating your charts by inserting horizontal lines, moving them up and down, placing arrows on your charts in particular areas. Right now, it's not about a particular assignment. What I want you guys to really just be able to do is move around in your charts. Know how to add and delete currency pairs. Know that if your market watch is missing or your navigator is missing or your terminal is missing, how to pull it back up. Know how to pull up a horizontal line and move it to the top, to the bottom, to the middle of your chart. Your arrows, same thing. Really knowing how to label. So practice labeling. Look at minimizing label, maximizing label. Know your time frames. See what the market looks like from a daily chart to a 15-minute chart, and really start getting comfortable with seeing how the market is moving throughout the day to be able to determine what time of day that you want to trade in, whether it's the New York market, the Tokyo market, the London market, if you are a night owl or a Forex vampire, as we call them. Really figuring out those things as it relates to you and your personality and navigating the charts. Ooh, yes. That is an early bird. That's London market, and London market is awesome. I just can't do it. All right, ladies, have a wonderful day. I will post this in the group so that you guys can review it and definitely practice with it this week. And I will see you guys again on Monday. Robin will come in this evening for the Science of Getting Rich. We are closing up Forex Essentials. So for those of you that are moving forward to prep school, we are not only about empowerment here within our group, but also others. So each one teach one, each one reach one. So make sure that you have talked to your friends and family about hopping in and getting in Forex Essentials at the discounted price, because I will be closing that up here in the next couple of days. So $199 at least until the end of the week. It's going to go back to $299. So have a great day and a great week, and I will see you guys this evening on the Science of Getting Rich.